We are back with Janae Adams with DebtSucks University and Ted Rossman from Bankrate.com and CreditCard.com. They are answering your money and debt questions. Make sure that you send a text message and we will be sure to get it answered. Let me start with Ted in this segment. A lot of people have wondered, does applying for a credit card impact your credit score?
It does in a few ways. So my main message here is it's fine to apply for a credit card or any loan for that matter once in a while. You just don't want to overdo it. You definitely wouldn't want to apply to a whole bunch of credit cards all at once. I would say try to space those applications out, maybe at least every 6 months between them. And the reason is because every application is going to put a hard inquiry on your credit report. Basically just a notation that you were seeking credit. And like I said, once in a while is fine, but each one may trim, let's say 5 or 10 points off your score. You don't want too many of them. It makes you look desperate, makes you look risky. Another thing is that every new card will lower the average age of your accounts. And that's going to hurt you in the credit scoring system. There's actually one thing that would help you is having more available credit. We talk about credit utilization being a key factor. That's credit you're using divided by credit available to you. So I know some of this sounds a little mystifying for people. The general rules of the road are pay your bills on time, keep your debts low, don't apply for too much credit all at once. So some of the nitty gritty, is just be careful, space the applications out and you should be fine.
All right, Janae, what is a way that younger people can start building their credit? Because you've got to start somewhere.
Yeah, and unfortunately with younger people, it's going to be a little bit harder, mainly because of student loan debt. Student loan debt ends up, especially if you miss a payment, which some people tend to do, it ends up hurting it. What I tell young people, especially when I'm speaking on college campuses around the country, is that start to build up your bank, okay, so that you can be your own bank. Start to get your $1,500 in emergency fund when you get that new salary going, and start to make sure that you're not using all of your salary every single month in expenses, because guess what, the student loan payments are coming. So I'm always trying to show them how to actually build up their bank so they could be able to use their own money, because a lot of times they're going to get hurt because of student loans in the first place when it comes to credit score. So they have to take a whole different approach when it comes to their money and build up their own bank.
Is there anything a parent can do to help, give them a little bit more, I don't know if it's just a leg up when trying to build that credit?
And that's for me?
Yes, yes, ma'am, sorry.
Yeah. So what I would say, a lot of times it's not much, unless they're going to put them on a credit card for them like a cosigner, which I don't suggest, because a lot of students, once again, I speak on college campuses, come to college campuses with their credit already wrecked because of actions like that, because their name has been put on a water bill or utility bill. So I really just like for parents to, first and foremost, the biggest debt that students ended up having is college student loans. So if they really want to help them start a great life, help them get scholarships before they go to college, help them save money so that when they get to college, they won't be struggling. And even if they don't go to college, they go to a trade school, go right into the world, that money that you save can help them get started on their apartment, help furnish it by paying cash. So the best way that you can help somebody, as far as parents are concerned, is to have money to be able to pass on to those children.
Ted, for someone who has paid off their debt and now they've got maybe 1, 2, or 3 credit cards with just an available balance on it, would you suggest leaving them open or closing them?
It's usually better to leave them open, and that's because of that credit utilization ratio that I mentioned, and also the longevity factor. A longer credit history is better, but especially on utilization. Like, for example, let's say you owe $4,000 across your credit cards. And when I say owe, this is usually calculated as of the statement date. So even if you pay in full, you could still have a hefty utilization ratio. So that's actually another thing, is maybe try to pay that down before the statement even hits. That's even better than paying it off later in the month. But just in general, the math here is such that if you owe those $4,000, but you have available credit of, let's say, $20,000, I mean, you're only using about 20% of that available credit. That's actually quite good. If you cancel some cards, though, and then maybe now you only have, let's say, $8,000 in available credit, well, now you're using half of it, and that's really going to hurt your credit score. So in general, you want to keep your debt low, but having a lot of available credit and having a lot of long-standing accounts can help. If you have a credit card that you're not using and you're paying an annual fee, I would suggest what's called a product change. That's when you call the company ask them, hey, could you switch me to another card? Maybe one that doesn't charge an annual fee, or maybe one that fits my spending habits better. It'll give me rewards on categories that I spend more on. In general, you want to keep old accounts open, but you definitely want to pay on time and in full if you can.
So would you say keep them open indefinitely?
I would, yeah. The longer the better in the credit scoring system. And this is actually another thing that kind of works against young adults here, because I agree with Janae, there's a lot of difficulty for young adults establishing their credit. And some of this is kind of self-fulfilling because it takes credit to get credit. And if you've been reluctant, or if banks aren't willing to give you credit, then how do you break into the system? This is actually one reason why older adults tend to have higher credit scores, is they just have more history, more longevity, more positive payments, hopefully. So yeah, the longer the better in the credit world.
All right, Janae and Ted, 2 segments down, 1 more to go. Keep texting us your questions and we will get them answered right after this break.